The following is a presentation of TFNN. The Tom Obrien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Rich in Massachusetts. Hey, Rich, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
Yes, sir. Thank you. I just wanted to mention that. So I read your books, and I think that was probably the greatest education I ever got. And now when you're talking about being patient, I'm finally understanding what that means, and it's really helping when you preach that. So I appreciate it.
Well, I appreciate you reading it, number one, and growling and prowling with us out here.
Hey, thank you very much.
Now, Tom Obrien.
Welcome, folks. This is Tom Obrien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. And, of course, the TGIF. Let's make it a great one. My guest today, Laura Johnson. Laura, thank you so much for being here.
My pleasure.
We're going to be out here growling and prowling with all you tigers and tigresses, folks. And Laura's here because we're going to be talking the top of the market, and we're going to be talking about what you may want to be doing at the top of the market. Let's take a look at one of our 4 agreements. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow Industrials up 61, NASDAQ was up 14, S&Ps were up 5.5, gold contract up $1.20, trading at $1,351 an ounce. Silver down 27 cents at $22.55 an ounce. Platinum up $3 at $1,455 an ounce. Copper flat at $3.26 a pound. Light sweet crude up 87 cents, trading at $97.98 a barrel. Bonds up 7 ticks. The 30-year was up 7 ticks at 135. The 10-year, folks, was up 5 ticks at 127. King dollar up 10 ticks, trading out at 79.25. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, cash S&P, folks. The high of Tuesday was 1,759. We got out to the 1,759.20, which is a mind blower. We're talking about 12 100ths of a tick away from it. Bottom line is that it's S&P is at that 1758, and more than likely we're going to see that 1777 get hit. We did 634 million out there versus 715. Dow Industrials. What do we do with the Dow Industrials? Dow Industrials are at 15,570. That last high that was generated out there is the 15,709. I expect more than likely you're going to see it get hit. Now, the composite, different ball game, folks. And we had talked about the A to B equals C to D structure off the bottom of 2009. That's where the 1776 number comes from. The composite has already done that. And what you have with the composite is this. We're at 39.43. The high that was generated on Tuesday was 39.47. You got to 39.61. You closed below it. Bottom line, I suspect the composite is at its high. And the reason I'm saying that, folks, is this. Is that if we go over to the NDX 100, and we look at the NDX 100, it had every right today to blast higher in a dramatic way. Why? Because you had Amazon up huge, okay? Amazon was up $31. That put some juice into it. Alexa Pharmaceutical was up $8. That's decent juice. Microsoft was up $2. But bottom line, guess what? It just couldn't. It was up, okay, but it was not up like it should be up. The small caps. Now, the small caps are screaming. And what the small caps did is this. The small caps failed. Small caps got over the high, closed underneath it, did all of the above. So next week, what does that mean next week? I suspect you'll have the S&P does want to go hit that level. NASDAQ composite, I think we're done. Dow Industrials wants to hit the high. Gold. What did the gold contract do? This is what we have with gold. She's trading out right now at 1351. She's building cause to get into the swing point that was generated out there in September, which is the 13.75, and I suspect what we're going to see is that we're going to see that run up to the 14.34 level. Bonds, this is a beautiful thing with bonds, no doubt. What we have with bonds is that interest rates want to go back down. The 30-year bond in the last month has just gone from 128 to 135. It looks like it wants to go to 140. The 10-year, same type of situation. We have with the yield on the 10-year sitting at 2.505. That 10-year, if you remember, is at the low rate of the 10-year was 1.67. We went from 1.67 up to 2.99. Now we're going the other way. What you're going to see here is that, bottom line, rates, once again, look to me like they're going to go south. Now, King Dollar. Let's take a look at King Dollar. What King Dollar did this week, folks, is broke down. Got below the swing point. Has light of volume, but guess what? King Dollar's got to get up to a price point of this 79.72, and right now we're at 79.25, in order to get traction for higher price. You know, that's the way this baby is set up right now. You know, we'll see what next week brings, meaning that you have the end of the month, you have window dressing, and of course what window dressing is that, you know, all the big hedge funds, all the broker dealers, they like to basically keep the stocks up, push them up a little bit higher to, you know, keep their book straight, and then you have the natural buying that comes in from the IRAs, you know what I'm saying, at the end of the day. So, bottom line, my take at this particular point, folks, is that the NASDAQ composite is at a high. The S&Ps want to go to that 1776, which is not that much more, and the Dow wants to go test it out here. I guess today, this is a perfect time for this, folks, and this is why. I was talking with Laura and my buddy Mark, and, you know, we were out and we were talking about the market in general, and Laura is into the insurance market, into the annuity market.
Correct.
And, you know, there's a lot of miseducation out there about what is out there that can protect you in markets in general. Okay? Mm-hmm. So talk to me first. Well, first off, thanks for being here.
My pleasure.
Really
Thank
appreciate
you for having me.
Absolutely. So talk to me first about what is an annuity?
Well, annuities basically are insurance for your retirement, but there's a lot of different types of annuity too, so it's kind of difficult to answer that question. Is it an insurance product? But there's a lot of different kinds out there.
Right.
Yeah.
And my perception, okay, is that annuities have had a bad name, you know, in general.
Yeah.
Okay? Talk to me about the type of annuity that you sell, and talk to me about what that means. And this is intriguing, folks, if you don't know this, as to how this works. Because what happens, well, here, talk to me about that. How does that work?
Well, let's go through like what the different types of annuities are first.
Cool.
The one that a lot of people know of is what's called a variable annuity.
Yes.
And in a variable annuity, your money is at market risk.
Okay.
In that your cash bucket is at market risk.
Right.
Sometimes you can put different riders on to protect it, but that's an additional fee on top of the fees that are involved in the variable annuities. So a lot of times you'll hear people say there's a lot of fees involved, and with variable annuities there are. And so then there's another type of annuity called a SPIA, which is a single premium immediate annuity. Those are the type of annuities that you see often in like pension plans, where you give the insurance company a single lump of money, and they're going to give you like a payout either for your life, for 10 years, joint,
yes.
Something like that. But you don't have access to your cash.
Okay.
So those two annuities are kind of why they get a bad rap. Not saying that either one of them is necessarily bad, but in variable annuities, they're really for younger people and that have time to make up in the market.
Sure.
And there's a lot of fees involved in that.
Right.
Single premium annuity, you're locked in. You can't change your mind. You can't stop the payments. You can't go back to accessing your cash.
Okay.
And so it limits what you're able to do.
Right.
And then there's a third type of annuity called a fixed or fixed indexed annuity.
Fixed index, okay.
Fixed index, yeah. And they are, those type of annuities, your principal is always protected. So
if I give you $100,000, my principal is protected.
The principal is protected, yeah. Okay. Unless you take withdrawals out, of course.
Sure,
but
yeah. Yeah, right.
And then it's either, your gain is going to either be based on a fixed amount, a fixed interest rate, or it's going to be tied to an index.
Okay.
So maybe the S&P,
sure.
Whatever the index is. The biggest advantage of those type of annuities is that your principal, again, is protected, but you only, once you get a gain, let's say the market goes up 10%,
yes,
you're going to get a percentage of that gain. So maybe you may get 6.5% of the gain.
Okay.
If the market goes down, you don't lose your money.
At all?
No. And not only that, but once you gained, your gain is actually locked in. And so they've been...
Even if the market goes down after?
Even if the market goes down after that, your gain is still locked in.
Correct.
Correct.
Okay, so folks, if you're watching Tiger TV, you're going to see this, because this is pretty sick. So you're telling me that, so let's say 3 months ago, right? Mm-hmm. The S&P was at 1590.
Correct.
Right? And we ride all the way up. Now we're at 1760. So if someone had bought 3 months ago, mm-hmm. they get all of this, and see, I'm a bear. Do you know what a bear is?
Yeah.
See, everyone knows, I must look like a bear, see, because I think this market's going down.
Right.
So if this market goes all the way down to 1560, they're still locked in at the highs right now?
They're locked in. Yeah, once you get your gain, it's locked in.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of tfnn.com. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Our guest today, Laura Johnson. We're talking annuities, folks, and what we were just talking about is the correct name fixed index annuity?
Fixed index annuity. Yeah.
Okay.
Yep.
So what I was asking her flat out is that she was talking about the aspect that if this is 3 months ago, you took a policy out, S&P's at 1560, S&P's at 1750 right now. My take is that we're going to go back down there, but you're saying that the gain that to 1570 to 1760 would be locked in for the client.
Well,
a certain percentage of the gain.
Right, a certain percentage of the gain, and each insurance company calculates how they're going to index that, in different ways. But
Okay.
yes, once you've been credited the gain, it does not go down, even if the market goes down.
Okay.
Yeah.
That's pretty wild.
Yeah.
So when people buy these, why do you buy one first?
Well, there's several different reasons. The majority of the people want to do it. They want to make sure that their principal is protected, and they want to get a percentage of the market. They're not looking to maybe become extremely wealthy overnight, but they're looking to make sure that they get a return of their income and of their principal. That's the most important thing to them.
And in this particular case, market-wise, you talk about volatility. We've had volatility beyond belief.
Well,
So it's very unusual that you can actually get a return and your principal. You're going to get your principal back. Period.
You got your in these kind of volatile markets like this, that's when these types of annuities do the best, because again you do lock in on your gains on those. And there's another annuity that's come out recently, and it's called the fixed index, but it's called a hybrid annuity.
Okay.
And those are really good for people that, especially if they're looking at taking an income.
Yes.
If they want to supplement their Social Security, if they want to have an income that they can't outlive, those have a lot larger returns on them and guaranteed returns on them than just the fixed index part. So those are called fixed index hybrid annuities.
Hybrids.
Yeah.
So how do you end up picking up? So let's say I call you up. How do you end up picking the annuity that I would want?
Well, the first thing is you got to go to an agent that works with more than one. I sit and I look at about 500 different annuities almost on a daily basis.
500.
They credit their credit ratings, the way that they credit your gains change.
Okay.
The way that they pay out changes. So you really, just like you sit and watch the stocks, you've got to have an agent that specializes in this. It sits and watches what the different annuity companies are doing and what their payouts are, because there are a lot of different moving parts. And if you don't compare the annuities one to the other, you want to get in the best one that you possibly can. But the most important thing I do is ask people, what's the money for?
Right.
That's the first question.
So if I gave you $100,000 and I'd say, okay, I'd have to figure out, do I want an income stream out of it? Which that's what I'd want, basically.
Well,
probably.
The nice thing about the hybrid annuities is that you can do that. They're flexible. Okay. So you can put your money into the annuity. You're going to guarantee that your principal is protected.
Right.
You're going to be able to.
I've never had such a thing,
Your principal being protected.
my principal's not protected for 30 seconds out of the day.
Well, and that's what this is for. A lot of my clients, they still like playing in the market, but they don't want to risk the money that they have to keep their standard of living.
Totally. Right.
So you want to guarantee the income that you need to have your standard of living remain the same.
Yes.
And so we'll take that and we'll put the way that we compare it is if you just want to put it in some place, you're not sure you're going to take an income.
Okay.
You just want to protect the principal, make sure that there's some money there. It may not be something you need. You don't want to do something that you need liquid immediately. You can take about 10% out of these each year. There are surrender periods, so you want to look at those. But the majority of the people right now are wanting them exactly as you said, as income to supplement their Social Security.
Sure.
So what you do is, let's say you take $100,000. Then I'll take a look at it, and you say, I want to take income in 2 years.
Okay.
So I will put it in a calculation. I'll look at all the different annuities that I have. Usually one that you're going to take income from relatively soon, you're going to want something that has a nice bonus, that has a guarantee on it. But you also got to look at the payout rate. So there's a lot of moving parts in it. You've really got to understand how annuities work, and that's why you've got to come to somebody that's a specialist, not just a banker or an independent, person that does a lot of different things. You want to go to a specialist with annuities.
So explain to me how a bonus works. What does the bonus mean?
Basically that you get a bonus. Now each annuity is going to credit that bonus in a different way. There's some that give you the bonus and it's cashed right there, it goes right into your account. A lot of them are vested so that if you cash the annuity out, you're going to lose your bonus.
Okay.
But if you're doing it for an income stream, it goes immediately onto that income base. And then what I tell my clients is the bottom line is what you want to ask your agent is how much money am I going to get in my pocket guaranteed 3 months from now. So or 3 years from now, excuse me. So I can tell my clients this is the minimum amount of money that I can guarantee that you're going to have. Now, if the S&P does better, if you're tied to an S&P index,
sure,
that money's going to continue to grow. So it might be higher than that, but at least I can give them a bare minimum of exactly what they're going to have cash in their pocket.
So when we're looking at firms, what happens, Laura, in the equity business, right, is that large firms do business with other firms because they get their commission structure is much bigger.
Correct.
Right? So in the insurance business, right, is that one of the main reasons that some firms only have 2 or 3, right? I mean, because that's the way the business runs.
Right. You're limited to who you're allowed to offer annuities through by whoever you work for.
Right.
Whereas an independent person like me, I'm not limited by anybody. I can go directly to the company and contract it if I say, oh wow, this one's doing really well.
Okay.
I'm gonna go and be contracted directly with that company.
That is so cool. So now talk to me about the buckets that are inside an annuity, because I believe I was looking at a term sheet, folks, and inside the sheet there were a couple of different. There was actually what I was looking at is this: is that you put in $100,000. The bottom line is that you were getting about $8,300 a year after 3 years or something. But then you were explaining that guess what? That goes on. That can go on forever, even if the money's gone. So how does this work?
Right. Well, the other thing that's good about hybrid annuities, and again, it's not all hybrid annuities. It's certain hybrid annuities, so you have to really look at them carefully. But your money that's in your cash bucket is still growing according to whatever index it is, even when you're taking income out of it.
So can you just explain the difference between a cash bucket and what's the other bucket?
It's called an income bucket, or the income base.
Okay. And that's where I buy a rider, right?
Correct.
Okay.
A regular fixed indexed annuity is not going to have. It's still going to have the protection of your principal, and you're going to get a percentage of the market growth. You're not at market risk.
Okay.
But if you want a guaranteed income rider, there is a fee for that. Usually they're under 1%. A lot of them are a lot less than that. But for that rider fee, what you're going to do is you're going to get a guarantee that not only can you have an income stream that you'll never outlive, but it also still allows you to have access to your cash bucket that's still continuing to grow. And so, the one that I looked at, this one kind of basically tied to the S&P for the last 30 years. So if you put this one in and you use exact numbers of the S&P for the last 30 years,
yes,
you could potentially put $100,000 in. It's got quite a large bonus. You start taking money out, let's see, 4 years from now, you're going to get about an $8,000 payout every year. Even if your cash bucket did disappear, you'd still continue to get that money.
Yes.
But you also have your cash bucket over here. So at 95, it's possible that you've received $217,000 in income payouts, and you still have $105,000 to leave to your heirs.
And folks, you didn't start this at 95. You didn't start this when you were 10 years old. You started this when you were 65.
Yeah.
You stay right there. Folks, Laura's phone number is right under breaking news. Check it out on the front page of TFNN. Laura and I are going to be coming right back. And if you have any questions, our phone number is 877-927-6643. Coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom Obrien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 61, Nasdaq up 14, S&P's up 5.5. My guest today is Laura Johnson. We're talking about annuities, folks, and we're talking about fixed income annuities. So if you can break down for me, the S&P goes up 100 points. Mm-hmm. And, you know, my understanding is that your principal is secure.
Correct.
And you can't lose your principal. But my understanding is that you can also get a percentage of the gain of the, in this case, let's talk the S&P.
Right.
So let's say the S&P goes up 100 points. What are the different products what type of gain could I get out of that?
Well, you're going to want to look for an annuity that doesn't have caps. A lot of times the companies will come in and they'll cap the gain that you can do. So one of the things I do is I watch what the participation rates are, what the caps are, so that your money, not only is it your principal protected, but you want to make sure that you're getting the most gain that you possibly can.
And are there are big differences?
Huge differences in different annuities. So when people say, well, you know, my annuity didn't make a lot of money, well, you really got to look at the different ones and compare them and see which ones are doing well.
So these insurance companies compete for the product, just like in the equity market with large funds.
Yeah.
Let me ask you, what I was doing, folks, at the break, I was looking at her rider comparison. So explain to me how this rider comparison works.
Well, what I can also...
Well, first off, what is an income rider?
An income rider is what you can now put on a fixed indexed annuity.
Okay.
So you got your cash bucket, if you're going to cash it out, your cash bucket of, your principal protected tied to the S&P.
Yes.
But then your income rider can also have guarantees on it. Guarantees anywhere between 4 and 8% that it's going to grow.
That's going to grow?
That it's going to grow.
Guaranteed.
On top of that, if your cash bucket that's tied in the let's say the S&P went up 25%.
Okay.
And your participation rate was 65, 70%. Well, that's going to be higher than what the guarantee is. So your income bucket is actually going to increase, ratchet up to what the annuitization, or what the account value was on your cash bucket.
I see. Oh, interesting.
So it's the better of the two.
Okay.
So if the market goes down, you're going to get that guarantee. If the market goes up, you're going to get the highest of the two. So
so check this out, folks. I believe I understand this. Mm-hmm. So the guarantee is that when the market's going down, that guarantee could be between 4, 5, 6, 7%.
On your income.
On the income part.
Correct.
Okay, not on the cash part. And that's where that income rider would come in play.
Correct.
Interesting.
Absolutely, yeah.
And of course, that is huge amounts of money now compared to what, here, I'll bring up the bond market right now for you folks, okay? Just because if we went to the CD market, I mean, there's plenty of people that buy 10-year CDs.
Yep.
And a 10-year CD right now, in fact, I got it up right there. Okay, so we're at 2.5.
Wow.
Yeah.
Yeah.
So that's pretty sick.
Yep.
So, because it's basically almost the same thing.
Yeah. And some of these are giving bonuses now of, over 10% too.
So,
just right off the beginning, so you've already beat the CD from day one.
So when we talk bonus, so you give 100%, 100,000. Sometimes the bonus can be as high as 10,000. And is it the 10,000 you start making 4% on? Or how does that work?
Absolutely. You're absolutely
really?
right. Yep. If you look at the numbers, if we go back to the numbers that we were here. So this one you put 100,000 into.
Yeah.
Okay, your cash bucket's right at 109.
Okay.
Your income from day one, your income bucket is at 114 already.
That's interesting.
Yep. So that's where you start doing that base for. Now we started talking a little bit about the income rider comparison.
Yeah.
So you want to compare the two because if you look at this one, it's got a 4% guarantee.
Okay.
Now there's some other ones. If you look over here, well, this one's got a 6% guarantee. So you'd think that your cash in your pocket when you go to take it out is going to be higher.
Yes.
This is why you got to have an agent that pays attention.
Okay.
Because if you actually look, the payout is only at 5%, so you end up getting less money.
Really?
Yeah. So
okay, hold on. You got to walk me through this now.
All right. Well, the most important thing to ask is how much money am I going to have in my pocket?
And it's wild, folks.
That's all you need to know.
No. And you know what, Laura, I talk about this all the time. I talk about that, guess what? You can make $1 million, but if you just spent 1.1, you're toast.
Exactly.
Right?
Yeah.
So that's what we're talking about. Bottom line, what do we get?
Right. So you got to be careful of the sizzle in some of these annuities and make sure that you know what the bottom line is.
Right.
Exactly how much cash. If I wanted to take this out in 10 years, how much cash am I going to guaranteed to have? How much could I potentially have? If I wanted to take income out in 4 years, what's the minimum amount that I'm going to have? And compare them to at least 5 or 6 different annuities.
Now, we went through the 2008 debacle, right? People lost a huge amount of money. And unfortunately, in the stock market, people sell out at lows.
Yeah.
Sad but true.
Yep.
People are hurting. What happened there also is that there were a lot of financial companies that were hurting. How the financial companies that are behind the annuity structure, how do you look at those? And when the client comes in, like I say to you, hey, is the person that have my money, is this secure over the amount of time that I have it?
That's a really good question, because the insurance companies are rated. And so, you want to look at the way that the rating of the insurance company is, the financial backing behind them as well.
Right.
Some people talk about different states have different state insurance funds that can guarantee these as well.
Yes.
Usually it doesn't get to that point, though, because another insurance company will come in and buy it out. There's in the last probably 80, 90 years since these have been around, there's only been one company that's actually ever had to go to that state insurance fund. But it is there. Different states have different amounts that they'll guarantee, usually around $300,000.
So, well, what is interesting is that even the debacle, the government came in and guaranteed everything, basically.
Yeah, but the annuities were all okay.
No, they made money, right? So is this a state product? Does it go state by state? Is that how it works?
Yeah, you're absolutely right. It goes state by state, and each state puts different regulations on it. Florida actually has some regulations on age, too, so there's some that I can do for people that are under 65, some that I can do, different ones that I could do over 65. There's certain regulations on some of them as well.
That's wild. Yeah. So the Wharton.
Yeah.
Wharton, number one, is a great school, but there's a study that Wharton did. Talk to me about that.
Yeah, in 2010, Wharton did a study of 19 different, and this was just a study on fixed index annuities.
Yes.
Because there's a lot of different stuff that was out there in the media, and so they wanted to actually compare what would happen. What did they actually do? How did they do? And here's just a quote from the study. It said, for moderate risk-averse individuals, the fixed index annuity is judged superior in performance to various combinations of stocks and bonds. The fixed index annuity is designed for safety of principal with returns linked to the upside market performance. So I don't think it gets any better than that.
You know, it's wild. Think about this for a second, folks. Think about how much marketing is done in the equity markets. Yeah. I mean, we were just talking in my office. It's huge. I mean, but the mantra is, hey, listen, throw your money in the stock market, forget about it, leave it there forever, and, you're going to have more money.
Right.
Well, guess what, folks? Here, let me just so you can understand, how real that is or isn't, I'm going to turn around and I'm going to put up a 25-year chart for you. And it's like, oh, geez, guess what? It's 2000. Is it 2013?
I think it is.
Well, guess what, folks? We're at 1750 on the S&P, and in 2000 the S&P was at 1550. So that means we're up 200 points in 14 years.
Mm-hmm. Well, and the closer you are to retirement, the biggest risk that is. This chart right here, this shows different stages you have in your life when you're planning for retirement. In your accumulation phase, when you're saving up your money for your retirement.
Sure.
Yeah, you can average the market from 41 to 65. You can add them and average them out, and it's about 8%.
Okay.
The problem is when you start taking money out, if you took that same return that it's been done and you flip it over. So let's say you lose money in the first 2 years of your retirement.
Right.
It disappears real quick because you can't recover from taking money out and losses.
The people that had to retire did retire in 2008 or 9. Hopefully most of them didn't retire and they worked to now, and now they're all right.
Yeah.
But if you had to retire, then you're toast.
Yeah, well, it used to be 8%, on average return. You take 4% out in retirement. That was considered to be conservative.
Oh, is that how that works?
Yeah, how's it working for you now?
Interesting. Okay. Okay.
There's a lot of different articles. In fact, there was one out in Forbes not too long ago. The 4% rule's dead. It's just you got to have more guarantees, especially when you're within 5 to 10 years of retirement, and once you started retirement.
So this is a great product for people that are looking to retire 5, 6, 2, 3, 4 years from now. Really,
yeah, or
right?
even if you're retiring, you're 65, you need something to do with your 401k, you don't want to lose it.
Interesting.
This is a good way that you can protect your principal. Or I have a lot of clients we started to talk about where you guarantee your income to keep your standard of living.
Okay.
But the remaining amount, it allows you to be a little bit more aggressive in the market.
Right.
Because now you know that your money that you have to live on is protected, and you can breathe a little easier. and it allows you to be a little more aggressive.
So we get two buckets. This bucket here is going to give us a percentage of the marketplace. This bucket here, we buy the rider.
Right.
Okay. So let's picture I did something right now. 5 years from now, I say, okay, listen, did $100,000. 5 years from now, I say, okay, I like that $8,000 payout 5 years from now. So I start taking the $8,000 payout. The market continues up, right? So is this bucket? This bucket's making money, right?
That bucket is still making money.
Right.
Absolutely.
And this bucket here is just going down for what I take out,
what
right?
You take out, yeah. But then it ratchets up according to your.
Because if I make money here, does this bucket move to this bucket?
Yep.
Oh, baby.
Yeah.
You stay right there, folks. Laura and I are going to be right back. Laura's phone number, folks, okay, is right on the front page of our website under breaking news at tfnn.com. We're going to be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom Obrien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting tfnn.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom Obrien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom Obrien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting tfnn.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting tfnn.com.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Hope everyone's having a great day out there, safe day, and let's make it a great weekend. My guest today is Laura Johnson. Laura's phone number, folks, is 813-569-9222. And if you happen to be in your car, no matter where you're traveling out in that beautiful country of ours, it's right under breaking news on the front page of TFNN. We were talking about the two buckets you have, and the aspect that some annuities, right, which you just clarified to me, but if we can clarify it to the audience, will take one bucket and you can actually put it in the other bucket.
Right.
And so then there's some that doesn't. I guess that's where it's still important to make sure you get an expert as yourself that goes through a lot of different annuities, as I go through a lot of different equities and currencies. And
well, the one thing to remember is with fixed indexed annuities, they're all going to be good in the fact that they're going to protect your principal.
Yes.
And you can have this. But besides that, you really do have to compare. When I said, that the account value increases the income value, some of them they do.
Okay.
The ones that I work with do. But not all of them do. So I wanted to clarify that, and you're absolutely right. A lot of people get scared at fixed indexed annuities, the hybrid annuities, because there are some moving parts in it. It's not that complicated, but you really need to go and have somebody that can sit down and study them for you.
Talk to me about this is pretty neat, folks, okay? Because I was asking her about, well, what happens, you get sick. So talk to me about how there's an enhanced health value inside this.
Right. Some of them will have what's called an enhanced benefit rider.
Okay.
So on your income rider, if something were to happen to you, if you're familiar with what's called ADLs, it basically is something that determines whether you need assistance.
Okay.
And so if you have one of these ADLs, or if you have a health issue that qualifies for this enhanced benefit, it'll actually double your income. So if you were receiving $8,000, it's going to now give you $16,000.
And where does that other money come from?
Well, it's just part of the insurance. This is insurance, remember, and so that's one of the things. That's one of the things, the riders you can put on. I do that for some of my people my clients that may not be able to qualify for long-term care. It's not long-term care per se, but it does enhance your benefit. At least there's no underwriting or health questions for that.
Really?
There is once you you have to show proof, obviously, that you need the assistance. But once you do that, then you can double your income that way.
Well, we're going to be on the beach, so no one's going to get hold of any of you tigers or tigresses. But it's great to know that there's a benefit like that. That's a huge benefit.
Yeah. There's
particularly because long-term insurance is great to have, long-term care, but it's very expensive depending when you bought it.
And some people can't get it.
Oh, really?
Yeah, because of health conditions. If you can't get it,
interesting.
Then you got to have something. And then there's also ones that you can tie that are tied to inflation. So you can get inflation protection.
Okay.
A lot of people are real concerned about inflation right now. So it may be a lower payout in the beginning, but it's tied to the CPI and not the change CPI either.
Yeah, right.
And so, if people have concerns about that, I can put a rider on that has inflation protection on it as well.
Now, what is interesting here is that, talk to me about would the correct term be judgment proof?
Yeah, well, you mean against annuities?
Yeah.
Yeah, that's another thing that's good about annuities, and obviously I'm not an attorney, but they are free. You can't put a lien or a judgment against an annuity.
Really?
Yeah, and a lot of my clients say, well, I always pay my bills, and I'm not going to. I said, well, do you still drive?
Oh, yeah. No. Well, what also happens in this day and age, okay, did you see, okay, so check this out, folks. This is a crazy story. I believe it's the Attorney General of North Carolina. It's in the paper today, right? Their children are graduating from high school, okay? Right. The bottom line is that they're having a high school party, and they're giving this guy a huge amount of flack because, the kids are drinking. It's like, oh, hold it. Listen, folks, I don't agree. I don't want people to get wasted and all that. But the bottom line is that I don't know too many parents with high school parties these days, okay? It used to be legal when we were 18 that they're drinking, okay? Yeah. It's not the end of the world. But in that context, there is no doubt, and I remember even in my own house when it happened, I was always worried that, oh, man, if someone ever leaves, right, and we grab everyone's keys, but if someone did ever leave and got in an accident, you could lose everything just like that.
Yeah, absolutely.
Yeah. So it is important in the context of the society that we live in that, that you are covered, or at least that certain assets are definitely covered.
Yeah. And as we get older, we don't seem to be getting better drivers either, and that's putting us better, more at risk.
Oh, that's interesting. That's interesting.
What might happen as well. So
yeah,
you get even more importance to protect that money.
So when you're looking at how many annuities are in the state of Florida, or how many annuities do you actually look at in the state of Florida?
Well, there's actually over 3,000 different annuities in the state of Florida.
Really?
Fixed index annuities, yeah. So there's quite a few. Now that it's a lot of, one insurance company will have 5, 6, 7 different annuities.
And are the products always changing?
Products are changing monthly, yeah.
Okay.
Yep, different participation rates, different payout rates, different bonuses, things like that. So what's there today may not be there tomorrow, or could be very different from what was there 6 months ago.
Yeah, so I could have had a buddy 6 months ago that I'm talking to that they had a decent deal. I try to go get that deal, and that deal's not there. So the key is to basically get someone like yourself that can research that and say, okay, listen, this is what you have, and I guess it's what the client wants too. It's an arrangement of so many products, and say, okay, what do you want that for?
Yep. What do you want the money for?
Talk to me about. Okay, so we get an income stream that's coming out, but then all of a sudden I get into a trade. I'm in a trade, and all of a sudden I blow my brains out. I say to myself, man, I just lost all my money. I call you up and say, Laura, I want that other $50,000 because I'm going to go trade again.
First of all, I'm going to have you get a sanity check.
Listen, I've had a few of them, okay, and they all come out the same way. Okay, I'm fried.
Yeah,
I've been history since day one, so that's how it goes.
Right.
But so let me ask you though, can I go back and get money out of that annuity?
You can get 10. Everyone is different, but usually it's about 10% a year that you can get without any kind of surrender period penalties or anything like that.
Okay.
Some of them have, if you didn't take anything out 3-4 years before, it's cumulative up to about 50% that you can take out.
Okay.
And then you got your income riders as well, that you can take it out even as an income rider. The average for somebody that's about 65, usually about 10-year annuities is on the average. The surrender periods usually penalties usually decrease each year.
Yeah,
but you can always have access to at least 10% of your cash. Yeah.
Listen, folks, Laura's number is 813-569-9222. You want to get educated about annuities, folks? Give her a call. If you happen to be driving in your car, don't write it down, folks, okay? It's on the front page of our website. Just remember that you always can call us right at TFNN. Listen, we really appreciate it. I want to bring you back. And you don't know this, okay? But see, I'm this big bear, and I think we're at the top. And I know people like to stay in the market. If they're going to stay in the market, well, guess what, folks? You can do both. You can stay in the market. You get upside if it comes up, and you get a guarantee on the other side. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great one, safe one. Laura, thank you so much.
Thank you. Awesome. My pleasure.
Wow! Look at them, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.